Good afternoon. This is Brian Split with Allendale, and here for your closing commentary on Friday, April 16th, 2010. We're going to start with a quick update on the grain trade for today. We did have May corn settle 3/4 of a penny higher at $3.64. December corn was unchanged at $3.94 1/4. This is a strong weekly close for corn. Last week's high for December was $3.90 1/4, so we did make a higher close on the weekly chart and closed above last week's high, which is going to keep momentum short term in the bulls' favor. Also, for the old crop corn, we closed above the February lows, which is also significant. Possibly the turning point for corn was the fact that we had a USDA report a week after our quarterly stocks report, adding more corn to the pile, but we were unable to take out the lows from the day of the quarterly stock report. In the soybeans, we were up today a penny and a quarter in the May contract at $9.85 1/4. November soybeans were 4.5 higher at $9.65 1/2. And again, we did have a strong weekly close on the soybean charts, taking out some major moving averages. Early in the week, we took out the 200-day moving average, also taking out the 100-day moving average after that. So with November soybeans closing solidly over $9.50, this does look like a breakout to the upside. One thing that we do want to mention is that today's high was the December low for the November soybean contract. If you may recall, when December corn was rallying near 415 in late February, early March, that did fail at the December low. So this may be an area where if you are running light on your new crop sales, you may want to get some hedges done here on the new crop. As far as wheat goes, May wheat was up 10 1/4 at $4.90 1/2. We did have July up 9 3/4 at $5.02 1/2. That is a close solidly above the 50-day moving average for July wheat, above $5 psychological resistance. So again, closing above last week's highs. I think you may see a common theme that we did have a good, strong close technically on all the grains this week. Now, the big news today in the outside markets was the news that the SEC is going to be charging Goldman Sachs with fraud based on the subprime mortgages. So that created a lot of liquidation in the outside markets. Namely, we had crude oil down $2.08 in June. The May contract will expire on Monday, so June will be the front month next week. We actually wanted you to buy a test of $84 based on our research meeting. We did have that test today. So if you are long, we're going to look for a retest of the recent highs. If the market does break out above recent highs, above that 87.50 area, we're looking for a new objective of $91 to $92 there. In gold, we were down $23 today. Silver was down 75 cents. So that just shows you the mentality of the market at this point, with a lot of these markets at pretty high prices, and the news regarding Goldman Sachs coming out, there was a lot of money leaving the market. Equities are down about 100 points in the Dow going into the final hour of the trade. So it'll be interesting to see how the equities can take this news and how we're going to close. We've seen a continued uptrend in the equities recently, with the NASDAQ actually gapping higher this week. So the trend is still up. If we can have a strong close in equities after this news, that market's still going to look very strong. Something in the dollar, we recommended selling the U.S. dollar. The U.S. dollar had gapped lower on Monday. The high end of the gap was the 40-day moving average. The low end of the gap was the 50-day moving average. We wanted you to sell a close of that gap, which did happen today. This is a low-risk opportunity. We feel a close above 81.10 is going to be a resumption of the uptrend. So you can be a seller risking a close there with a pretty minimal risk on that trade. If we do see a failure at the close of the gap, we would expect a retest of 80 in that June contract. Moving on to the livestock, we did have the hogs higher today. Cutout values have been aggressively higher all week, and we did have the May contract finish 37 higher. Your June and July contracts were quietly higher, up 5 to 7 cents. In the cattle, we were up 35 cents today in June. Cash cattle did finish down $2 to close the week at 98. So that is worth mentioning. Feeders were mixed with some months higher and some lower. So now going into next week, next Monday is going to be a very important day. If the grains do not see some follow through, we may see some profit taking after recent runs. The bean market is getting overbought, and again, we did hit these December lows, which should have been a longer longer-term hedge objective for those guys waiting to hedge after we bounced off of $9. So if we can go through 968, potentially your next objective is that 85 to 95 area for more hedge opportunities. If corn can manage to go through the 50-day moving average right under 395, we do feel that obviously $4 being the next psychological number to push through. After that, your 100-day moving average is right at about 410. So that's probably the next spot you want to look at for hedge objectives there. But we have a lot of great research for you. Take a look at us online at www.allendale-inc.com, or call the office, talk to a broker at 1-800-2-MARKET. That's 1-800-262-7538. Great luck trading next week, and it was good to talk to you. Thank you.